I want to understand how good you feel about the business here in India, because if I were to take a look at your numbers, you reported your highest ever profit before tax in 165 years in India. That was for FY22 at 6,480 crores, slipping a tad to 6,370 in FY23. How strong do you feel about India, about the India business? And I want to ask you a more general question about foreign banks and their presence in India, because you're an outlier in comparison to what we've seen others do. And it's literally 4% of the loan book and about 5% of deposits at this point in time. Why do you believe that's the case? And what is the aspiration for Standard Chartered in India? Yeah,
first of all, we are delighted with our business in India. It's a very strong business. We have a very strong corporate business serving both large Indian corporations who, very importantly, are investing increasingly into India. That wasn't always the case. Some of the big Indian groups were as inclined to invest outside as inside. That's changed, and resources are coming back into this super fast-growing economy. We're very happy to support that. I think we have a big market share with those companies. The international companies are also stepping up their investment in India. Now, you can look at FDI statistics from month to month and see a very erratic story. But every indication we have is that international investors are very keen to tap into the Indian consumer market, to the Indian infrastructure development, to Indian technology by investing in the country. And that's a very important part of our business, is serving those foreign companies on the ground in India. And of course, we're a local bank. We've been here for 165 years. We understand the market well. We understand the ins and outs. We also have a retail business. The retail business has gone from strength to strength over the past 3 years. So there's some measures of things like Net Promoter Score, which is effectively it's a customer satisfaction survey done by an independent party. We've been #1, I think, every 6 months for the past 3 years in terms of customer satisfaction in our retail business. Why? Well, of course, it's a nice brand. People like to bank with us. But we've got good people, good products and services, and we've been investing in digitizing everything that we do without losing the human touch. That's our approach. We're generating good returns on the capital that we deploy in India. We're paying healthy taxes to the Indian government, which is also an important part of our contribution to society.
Is that a concern, though?
It is a concern, yeah. I mean, we're paying a lot of taxes, but that's because we make a lot of profit, and that's what it means to be a part of a community. But all in all, we're very happy with our Indian business. It wasn't always thus. There were times in our corporate history when it's been quite difficult in India. But I think the combination of economic reforms that have been introduced by a succession of governments, but obviously accelerating under the current government, the fact that India is just in the right place in terms of its embracing of technology at a time when that's a distinguishing characteristic. And India's been quite welcoming to long-term foreign players, if I can call us a foreign bank, but who have made a strong local commitment. So you mentioned that we're a bit of an outlier. I'm not sure exactly what you had in mind, but
because many have either shrunk the businesses or left altogether.
Yeah, some have left, and we've done the opposite. We've doubled down. But we had been here for a long time, and we've got a particularly strong franchise. So we're increasing our investment in India. We will continue to increase our investment.
What would that mean, if you can quantify that for us?
So the biggest investments have been in technology. So creating a digital interface with our clients that is best in class. That's stiff competition because the Indian banks, of course, are very strong in their digital offering. It's adding relationship managers or bankers in both our retail and our wholesale business, which we're doing consistently. And it's making more capital available to our clients, both international corporations who are investing in India or who have businesses in India, as well as local corporations. Importantly, we've had some interesting innovations in India as well. So we set up, for example, a small and medium-sized enterprise e-commerce platform. It's called Solve. Built in Bangalore. It's now got something like 700,000 SMEs who are actively using this platform, processing tens of billions of dollars of transactions. And the reason that we did that is that we saw that there was a real crunch point for SMEs in India, where they weren't banked, I'll say, adequately by the local banks. The non-bank finance institutions were a little bit in and out with that sector. It's a super fast-growing part of the economy, and they needed access to different sources of funding, as well as professional services, as well as each other and their own supply chain. So their distributors and the people who provide product to them. So we set up this e-commerce platform. It's been a huge success, so much so, in fact, that we've replicated it now in Vietnam, in Ghana, in Kenya, and we'll launch in other markets as well. It's a homegrown, it's a Bangalore fintech is what it is, that Standard Chartered happens to own 100% of. Now, we've actually sold off bits and pieces to different investors who see the strategic value. But it captures, to me, a lot of the story of India, which is technical competence off the charts. I mean, we do most of our technical development globally is done out of our Indian technology centers. Entrepreneurial, right to the core. Feeding into the small business universe in India, absolutely critical for us, but I think also for the economic development of the country. Promoting international trade, so the international connections between these small businesses that couldn't possibly access their suppliers who may be sitting in Korea or China or the United States. We can provide that access, get them financing. Very exciting. This isn't defining our business in India, but it's an indication of the kind of things that we can do because we're local, understand what's going on, and because we have access to really global resources.
You know, you talked about this interesting experiment that you've done, creating this sort of fintech business here in India. Two questions. Is that going to be something that you consider doing in other markets as well? Yeah. Or are you looking at collaborating with fintechs, because that seems to be the way forward for many banks, including Indian banks here?
Yeah, and all of the above. So we have a unit of the bank called SC Ventures. So this solved business that I mentioned, the SME platform, was incubated in our SC Venture lab. We have built in that lab 15 businesses, including digital banks in Hong Kong, Singapore, including banking as a service models that we've launched in Indonesia. So this sort of incubation is something that we do regularly. Solve, which I mentioned, is one of the more successful ones. But we've had great success overall. We partner in the bank with well over 300 fintechs. In fact, I had my management team in Bangalore. It was just before the pandemic. Yeah. And we had a sort of a fintech fair, and we had 20 of our most interesting fintech providers. So these are really partners of ours. And they came in and just showed us their stuff. And it was everything from innovative approaches to a mobile banking application or service to some nuts and bolts part of the payment system or something like that, or UPI interface, and really very specific things. Oftentimes we'll make an investment in those companies. We'll own 5 or 10%. And we do that because it cements a partnership, and because we think, if we take you to be our service provider, we're going to make your company very valuable, and we want to benefit from that a little bit as well. So we do have a big portfolio of fintech investments, but then we've got the innovation that's happening in our businesses, and that's ordinary course every day, and a lot of that technology is developed here in India.
You talked about UPI, and I wanted to understand from you what you make of the UPI success story, and now that the UPI is moving out of India to other markets as well, and also this sort of push for digital public infrastructure, which is sort of, which is what UPI is sitting on, and that's part of the G20 declaration as well. The significance and importance of that.
India has been an absolute leader in terms of introducing the cutting-edge digital economy into the day-to-day lives of every one of its citizens, or at least many, many of its citizens. It's an extraordinary success. Now, UPI is an interface for small value, frictionless payments, of course, has been replicated in many markets, whether it's faster payment services. Interestingly, one of the last markets to come on board is the United States, but even the United States is getting there. And but India paved the way in terms of making this available to the masses. It's a great equalizer. It's wonderful for financial inclusion. It's bringing people who have never experienced the formal financial system into the system, and this is a good thing. But of course, you can continue to build on that. I think there's a whole fintech ecosystem built around the fact that you can have a validated, secure, and a very efficient form of payments, a set of payment rails. And it's absolutely liberating for the economy. We're fully plugged into that and are innovating ourselves around these platforms.
I want to ask you now about interest rates, because the jury's still out on whether we've seen the worst as far as interest rates are concerned, or we are going to have to continue to live with higher for longer. What's your take on the implications of higher for longer for the global economy?
Yeah. The first thing to note is that the effect of higher interest rates is being felt. Yeah. And whether it's in the prices of commercial real estate, which obviously are also being affected by working trends, but clearly it's affecting asset values. And it's slowing economic activity. Right? I mean, the comment you made earlier about Janet Yellen suggesting that we have a much higher likelihood of a soft landing, I think she's right. But we're talking about a landing. We're not talking about maintaining 2.5% growth. We're talking about can we avoid zero or negative. So yeah, the economy is slowing, and inflation is sticky. So I think the big spike that we saw in food prices and energy prices on the back of wars and supply chain disruptions, that's coming back off. But the structural inflation around wage growth and wage expectations, inflation expectations, I'm afraid that's still entrenched. And so I think we're going to be higher for longer. And then we'll get slowing economic activity that will create a little bit of slack in the labor market. Wages will moderate, and then rates will be able to come back down. But I think we're stuck with higher rates for a while. From the perspective of a bank, that's not an entirely bad thing. I can tell you 0% interest rates is a very bad thing. 5% is fine.
Yes, well, we look forward to seeing you back here in India. And thanks so much, Bill, for joining us here on the Global Dialogues today.
My great pleasure. Thank you.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team, for now, goodbye. Thanks for watching. We'll see you again next week. Goodbye.